Good morning. You're watching Market Cafe on ET Now with me, Shreyansi Singh, as well as Lisa Fernandez. Over the next 1 hour, we'll take you through news on the global as well as domestic front. But Lisa, first of all, good morning. How is the handover coming in from the global markets?
Right, a very good morning to you, Shreyansi, and to you viewers as well. Well, the handover from the US market is looking pretty good, and November has started on a good note for the US indices. All the indices, they closed higher, and this is after the big event, Fed Reserve, they kept their rates unchanged. This is largely what was widely anticipated. They have kept the rates in the range of 5.25% to 5.5%. And even this is amidst the Fed statement coming that they have left the door open to a further increase in the borrowing cost, and this is in the policy statement that they acknowledge that the US economy is strong. Well, on the other macro events that has come up, the job gains have moderated since earlier in the year, but that remains strong. And even the job openings position, that is at 9.55 million above estimates. This is as per the estimate of 9.5 million. The manufacturing index for October, that stood at 46.7. It was below what was estimated at 49.2. So there are the odds of December Fed rate increase that has fallen based on CME Fed Watch. And on the silver lining, the bond yields that has slid following the rate decision. If I look at the bond yields now, that is at around 4.72%. Remember, it had topped 5% in October. That's the highest. It was a multi-year high. So on the back of all this, Dow Jones advanced around more than 200 points. S&P 500 climbed more than 1%, and it briefly crossed its 200 DMA level as well. Nasdaq, it added 1.6%, and on this rally, tech and semiconductor stocks also saw a rally. Stock futures, currently it's trading flat but with a positive bias, and this is ahead of the earnings. Starbucks, Eli Lilly, Peloton as well as Fox will be releasing their earnings. So that's the handover coming from the US market, but even European market also saw good gains. If I look at the earnings, Aston Martin, it has fallen sharply, and this is because the earnings that came out and even the outlook that has been quite weak for Aston Martin. But overall, even the European market is looking decent. It saw gains across DAX, Stock 600 as well as FTSE. So that's largely the handover coming in from US as well as European market, Shreyansi. But what has been the FOMC impact on the crude as well as the gold prices as well?
Right. So this is really interesting. When you look at oil prices, they eased about 1% to a 3-week low on a rising US dollar, as well as after the US Federal Reserve kept interest rates steady as expected, but noted that it would keep the door open to possible future rate hikes due to a strong US economy. So that's the handover coming in from the oil markets at this point.
Yes,
but what are the key events that you're looking out for?
Yes, I know in gold prices, they had been hovering in that $2,000 per ounce level, but now it has gone below because it's anticipated that, the higher interest rates that may weigh on. But let's look at the other events also in the pipeline. We have the Bank of England rate decision, US initial jobless claims will be out, and back home on the Q2 earnings, big nifty earnings, we have Tata Motors, Adani Enterprise that will be reporting their earnings. On the corporate action front, it's the weekly expiry, and companies like Solar Industries will be considering their fundraise. On the IPO action front, lock-in opens for Gland Pharma as well. Shreyansi, what are the other events on the global side?
Yeah, let's switch focus to global news now. When you're looking at Palestinian casualties, they're nearing that 9,000 mark, and still there are no signs of a ceasefire. The United Nations High Commissioner for Human Rights has referred to Israel's strike on Gaza's Jabalia refugee camp as disproportionate attacks that could amount to war crimes. United Nations is appalled by the Israeli strikes, not once but twice on the same camp, leaving 195 dead and several missing. In fact, ambulances are carrying wounded Palestinians entering Egypt from Gaza through Rafah crossing, which opened for the first time since October 7th. The only remaining hospital serving cancer patients in Gaza has now been forced to shut down. Meanwhile, the Israeli military has said its forces are at the gates of Gaza City and that soldiers had breached Hamas' first line of defense in northern Gaza. Now, Latin American countries have grown increasingly critical of Israel. Colombia has recalled their ambassador. And when you look at Argentina, that also condemned Israel's attack on the Jabalia refugee camp. Bolivia also cut ties completely.
And let's get you the story on the flip side. Walmart Foundation, which is the philanthropy arm of the US retailer, has pledged $1 million to an Israeli disaster relief organization. And as per reports, Walmart has now joined the slew of US corporations, the likes of UBS, Goldman Sachs, as well as Jefferies, extending support to Israel.
Shifting focus away from geopolitics now, the Federal Reserve, as expected, has held benchmark rates yet again amid a growing US economy and a labor market and inflation picture that still defies the central bank's targets. Now, FOMC unanimously agreed to hold the key federal funds in the 5.25 to 5.5% band. Now, mind you, this is the second consecutive meeting that the FOMC has held rates following 11 rate hikes, 4 of which were this year itself. Let's hear out an excerpt from the Fed chair's speech.
Good news is we're making progress, and monetary policy is restrictive, and we feel like we're on a path to make more progress, and it's essential that we do. We know now is, within a range of estimates of the neutral rate, policy is restrictive. And it's therefore putting downward pressure on economic activity, hiring, and inflation. So we do talk about this. There's not any debate or attempt to sort of agree as a group on whether our star has moved or not. Some people think it has. Some people haven't said that don't think it has. Ultimately, it's unknowable. And so really, again, what we're focused on is looking at the data and giving ourselves a little more time now to look carefully at the data by being careful in our moves. Does it feel like monetary policy is restrictive enough to bring inflation down to 2% over time? That's the question we're asking ourselves.
And while we are addressing the macro picture, let's bring the spotlight on Southeast Asia. According to a report issued by Google, Temasek, as well as Ben Company, Southeast Asia's digital economies are expected to hit $218 billion in 2023. That's 11% uptick seen by the end of this year. The report says that the economies have weathered macro headwinds better than the rest of the world, citing pickup in the consumer sentiment.
And shifting focus back to earnings, PayPal reported a beat in Q3 while revenue edged by views. Now, guidance for Q4, however, came in below estimates. Meanwhile, chip designer Qualcomm reported Q4 results that beat estimates for sales despite a year-on-year decline. A strong forecast for Q1 issued by the company drove the stock in after-hours trading.
And LinkedIn, the business-focused social media platform, which is owned by Microsoft, now has more than 1 billion members. Company has said that it is adding artificial intelligence features for users with a paid subscription of the platform.
With this, we're timed out on this segment, but see you on the other side.
Welcome back to the show, and we are on that part of the show where we mark the Asian market. So let's see what Asian market is doing. If I'm looking at the screen, it's all green on the screen for Asian market. Especially Kospi, it's surging the highest. It's up around 2%, and this is despite the inflation reports that has come in hotter than expected, and it accelerated for the third straight month because South Korea's inflation rate that has gone up by around 3.8% year-on-year basis, and this was higher than what was anticipated, 3.6%. So look at Kospi, it's up around 2%, and even the other indices also are doing pretty well. Japan's Nikkei is up around 1.2%. ASX is also at the same, it's up more than 1%. Hang Seng Index and Shanghai is also up around 1% higher. So it's looking good for the Asian market. Asian market picture is looking pretty decent. And even our GIFT Nifty, it's at around 19,226. Remember, Nifty, it closed below 19,000 level. So it's looking good for the Indian market as well. Our Wall Street, our Dalal Street, Shreyansi.
Right, and we also have a jam-packed lineup for you on the market and a host of earning counters that we're addressing. We have Kamal Kishore Chatiwal, who's the MD at Indraprasth Gas, talking about their earnings, followed by JS Gujral, MD Sirma SGS Technologies, talking about their earnings, Saurabh Chawla, ED Finance and Strategy, GMR Group Markets and Macros. And on markets, we do have Manish Dangi, who's the founder, Macro Mosaic Investing and Research, who's going to be addressing everything that is happening with the market. And we do have Ajit Venkatraman, who's the MD at Finolex Industries, to talk about their earnings. CS Muralidharan, CFO at Sun Pharma, that is also in focus on account of earnings. Prashant Tripathi, MD and CEO at Max Life Insurance, to talk about their earnings, as well as Anush Kathuria, who's the President, India at JK Tires and Industries, followed by Madhavan Menon, who's the Executive Chairman at Thomas Cook, to talk about their earnings. We also do have Anuj Jain, who's the MD at Kansai Nerolac Paints, to talk about their earnings, followed by Sudhir Sitapati, who's the MD and CEO at Godrej Consumer Products.
And Mumbai just got luxurious with the opening of Jio World Plaza, an unrivaled destination spanning 4 levels as well as 750,000 square feet. With over 66 prestigious brands, this upscale heaven is set to redefine the luxury shopping, rivaling Delhi's DLF Emporio. My colleague Aishwarya Patil, she has filed this report on it. Listen in.
Well, luxury has a new destination, a new address. The Jio World Plaza Mall marks the second mall in Mumbai which houses more than 66 luxury brands. It spans across 4 floors and will rival the likes of Delhi's DLF Emporio Mall. Now, yesterday marked a grand inaugural with who's who of Bollywood gracing their presence at this mall. And going forward, from today onwards, the public will be allowed to enter the mall and open and experience all the leisure, retail as well as dining experience. With respect to what's on offer at the mall, immersive top-end retail experience, they're also boasting of global shopping standards as well as entertainment experiences, exclusive hub for retail, leisure as well as dining. In terms of the brands and assortments that are available in this mall, we've got international newcomers to the Indian marketplace such as Balenciaga, ELN Cafe, Giorgio Armani Cafe, Pottery Barn Kids, as well as Pottery Barn Home. In terms of the Mumbai debuts, we've got Tory Burch, Versace, Tiffany, YSL, and among the iconic brands, you've got LV, Gucci, Cartier, Armani, Dior, Burberry, and Bulgari. And if that's not enough, Indian labels like Abujani Sandeep Khosla, Falguni Shane Peacock, Manish Malhotra, Reeb by Ritu Kumar, among others, are few of the assortment of brands that you will find at the Jio World Plaza Mall. Well, if all of these offerings put together are not tempting enough for you, they've got a VIP concierge, a butler on call, and even a taxi on call for you to make it even more grand. In Mumbai, this is Aishwarya Patil.
Well, this is as luxurious as it gets, but
Welcome back to the show, and we are on that part of the show where we talk about those stocks that will be in focus on the back of your earnings, brokerages as well as other updates. So let's move on. Auto majors have reported sales for the month of October. So let's go across to my colleague Srishti Sharma to do all the number crunching for us. Over to you, Srishti.
So for the month of October, we have definitely seen that festive cheer kicking in, and specifically for the passenger vehicle segment, which yet again continues to deliver better to our estimates. And in the two-wheeler category, like we were expecting that the sales could flare better than this time around, we would say a mixed set of numbers coming in, some hits and some misses. So let's talk on numbers then. Firstly, from the passenger vehicle segment, all the three companies, M&M, Maruti, Tata Motors, have delivered better to our estimates. A 7% jump coming in for M&M Automotive as well as Tata Motors passenger vehicle division. But look at the numbers for Maruti Suzuki, highest ever monthly sales coming in for the month of October, close to 2 lakhs of units, and that's a jump of 10%. So that was about the passenger vehicle segment. Continues to flare better, but from the two-wheeler category, Bajaj Auto and TVS Motors have definitely done well versus our estimates. Bajaj Auto a jump of 20%, TVS Motors a jump of 8% is what the company recorded. From Hero MotoCorp, the expectations were definitely higher, over 5.5 lakhs of units of sales we were expecting, and the company delivered in line to that. But a disappointment coming in from Eicher Motors Royal Enfield, because we were expecting a number close to 86,000 of units. 84,435 units is what the company has reported for the month of October. So a slight miss on that front. In the commercial vehicle segment, we were highlighting for our viewers that don't expect much, because September was actually quite a strong month for the commercial vehicle category. So month on month, you could see a blip coming in, and that's what we see happening. From Ashok Leyland and Tata Motors, we see Tata Motors commercial vehicle division, and lastly from the tractor division, a single-digit decline on a YY basis is what we have seen. But the companies are positive that the festive cheer will actually kick in, and that's applicable to the whole sector as well. So that was about the October sales, but November could be really interesting to watch out for. Back to you.
Right, thanks Srishti, but let's keep the spotlight on Motown for now. Hero MotoCorp has also reported a steady set of numbers for the second quarter. When you look at their revenue and profit and margin, these are all in line with estimates. So tell us a little more about this as well.
Well, yes, Hero MotoCorp has delivered an inline set this time around, though the expectations were good itself for Hero MotoCorp, and the company managed to deliver bang on, because look at the margin that has come in line to our estimate at 14.1%, and that's an improvement of 30 basis points on a sequential basis, because the volume has seen a jump sequentially, yes, but on to the revenue figure, we have seen a jump of 7.5%, and 9,945 crores is what the company has clocked in. EBITDA has actually seen a jump of over 10% on a quarter-on-quarter basis, and even profit has come in slightly above our estimates. We were expecting that to be 983 crores. 1,054 crores is what the company has reported onto the bottom line. So would say inline set of numbers coming in from Hero MotoCorp, but the key highlight this time is where the company says that the margins have been aided by the commodity cost, leap savings as well as product mix. But going ahead onto the outlook, they are very positive onto the festive sales, because Niranjan Gupta, CEO of the company, does highlight that the consumer confidence is coming back, and that augurs well for the growth momentum in the times ahead. So that was about the earnings, a steady set in this particular quarter for Hero MotoCorp. But another interesting development and an announcement by the company is on the remuneration of Dr. Pawan Munjal, where Dr. Pawan Munjal, who is the executive chairman and whole-time director of the company, has now volunteered to reduce his fixed salary by 20%, and this will be effective by 1st of January of 2024. So when management is taking a salary cut, that's actually seen in a positive way given the times that Hero MotoCorp is in. But that's the announcement about. But on to the number front, the company delivered in line to what the street was penciling in. Back to you.
Well, thanks Srishti. So consumer confidence is coming back, and that's the word coming in from Hero MotoCorp, where it was a weak set of numbers for Tata Steel. Now, the company reported an exceptional loss of over 6,000 crores in the second quarter. When you look at margins, they have also narrowed on a quarterly basis. Ashesha is standing by with more details on this one.
Well, yes, Tata Steel has reported weaker than expected set of numbers. Revenues are slightly above what the street was working with, but margins are a big miss. In fact, the company has reported margins at 7.7%, much below ET Now estimates of about 8.9%, and even on a sequential basis, margins have contracted by as much as 100 basis points. On the bottom line, the company has reported a loss this time around of about 6,200 crores, but this is because of an exceptional item, because of several exceptional items that were reported in the quarter gone by. So exceptional items total to about 6,900 crores. So if we strip that off, adjusted profit after tax comes to about 700 crores, which is above what the street was working with. But on the bottom line, it is a loss on account of exceptional items. Now, exceptional items pertain to several factors. One, 2,631 crores is on account of impairment of step-down subsidiary of Tata Steel UK. They also say that they have provided about 1,200 crores in respect of past service cost on account of additional benefits that were granted to members of British Steel pension scheme. But all in all, numbers look weak. EBITDA is below what the street was working with. Margins have also contracted. They've come in below what we were working with. And on the bottom line, if we strip the exceptional part off, the numbers are still okay, but even otherwise weaker than what the street was working with.
Well, thanks, Ashesha. A host of earning counters now. Britannia also reported a muted top line as well as volume growth in the second quarter. When you look at their margins, they surprised with a sharp improvement. Winnie is standing by with more details. Winnie, help us put this into perspective.
Absolutely. So what we're seeing coming in is revenue and profits of the company came in line with the estimates, but volume growth, that was on the muted front as well. Because of that, the revenue also was a bit muted as well. So overall, a muted performance that came in on the top line as well as the volume growth front. Margin, on the other hand, saw a bit of an improvement coming in, better than what the street was expecting. So that is a surprise side coming in there, that sharp improvement in the margins as well. Also, market share gains in quarter two is what the company highlighted. So that is a factor that one should watch out for as well, because those are the two positives. One is market share gains as well as margins that have seen an improvement. Now, in terms of revenue, only 1% growth, 1.2% growth is what we've seen in the revenues. Volumes are inferred numbers coming in quite muted. 0.2% growth is what we could say in terms of the volume growth. So very muted volume growth versus an expectation of 3%. Revenue mainly impacted by this low volume growth as well as the price correction that the company has taken as well. So because of that, we're seeing an impact coming in on the top line. Margins also seeing in terms of a YOY basis expansion in margins because of the moderation in commodity prices, base effect as well as superior mix is something that is supporting the margins of the company. Other than that, key highlights: a greenfield facility in Bihar is commercialized for operation during the quarter, which added to the recent additions in UP as well as Tamil Nadu as well. And the company continued to say that, in terms of disruption and expansion in the rural areas is what they are focusing on as well. And this is despite the rural slowdown that they've seen, and they remain focused on driving the market share while sustaining profitability. So yes, we could say largely in line set of numbers. Volumes was a miss, but in terms of the margins, that was better than what the street was expecting.
Well, thank you for taking us through the numbers of Britannia. Will be in focus. Sharp improvement in margin despite a muted top line. That's the word coming in. But now shifting on to the brokerages. Mark Shi, a host of brokerages, have come out with their reports. Take us through all of those.
Well, yes, let me first start off with Hero MotoCorp. We have several brokerages coming in from Macquarie, Jefferies as well as Morgan Stanley. Now, Macquarie has maintained its neutral stance while Morgan Stanley has maintained its underweight call. Jefferies has come out with a buy rating on Hero MotoCorp. Now, largely, let's also assess what brokerages are saying. In the second quarter, they believe that gross margin actually led to a modest EBITDA beat. EBITDA per unit for the company was at an all-time high, but nevertheless, they do believe that market share loss in entry and the executive segment as well as slower progress versus peers in e-two-wheelers poses some of the growth challenges as far as Hero MotoCorp is concerned. Not just that, they believe that operating cash flow was seen lagging EBITDA in the first half, but this could see a seasonal recovery mainly on account of the festive season timing. So all in all, on the back of these brokerages, keep an eye out on Hero MotoCorp. Now moving on to Sun Pharma, who came out with its numbers as well. A couple of brokerage houses, Macquarie is maintaining an outperform rating while Jefferies is maintaining its buy rating. Brokerages are saying that the company reported an in-line set of numbers as far as the top line is concerned, but the bottom line was a big beat. They believe that the US generics segment actually disappointed, but the margins were hit by one-offs. The branded business, however, is seen to be driving growth. Not just that, they have also highlighted that the core earnings drivers actually remain intact by specialty sales,
ramp up as well as India and EM presence. Overall, the outlook that came in from the management also looks quite upbeat. So on the back of that, keep an eye out on Sun Pharma. Lastly, let's also focus in on Kansai Nerolac. Macquarie says that Q2 was below their estimates as well as the street's expectations. They believe that the deco sales grew almost 3.5% while the industrial sales grew by nearly 10% in the first quarter. They're expecting decorative demand to show traction going forward. All in all, Macquarie has maintained its neutral stance on Kansai Nerolac with a target price of 345 rupees per share.
Well, thanks Vamakshi for that detailed roundup coming in on brokerages. But switching gears to OMCs now. Oil Minister Hardeep Singh Puri said that OMCs are still burdened by under-recovery, hinting fuel prices may not see any cuts in the weeks to come. Now, he also adds that India is in talks with more than 27 countries to diversify supply chains. Listen in to a slice of what he had to say.
Today, because of the geopolitical uncertainty, supply chains could get affected. No, we have already buying from 39 countries. So if let's say more energy comes on source in one particular part of the world, obviously India, today we are the, I think, third largest consumer in the world. And obviously a country which is consuming 5 million barrels of crude oil in a day will obviously look at where, and Venezuela is a country where we had actually some payment stuck when the American sanctions came on. So I have, like you, looked at the global situation. Our ambassador designate to Caracas, he was with me today, and he'll be joining shortly. And one of the things I told him is to, look around, see what's happening. By the way, Venezuela has the largest reserves in the world. So if Venezuela, I don't know what the terms of it are, whether for 6 months or whatever it is, if Venezuela comes on the market, it should have a sobering effect on all the others who are trying to sing.
And in a major move towards the transparency, SEBI has asked the mutual funds to simplify and revamp their scheme information documents. Ankur is joining in with more details on what the revamp will entail.
Yes, market regulator SEBI has nudged mutual fund industry for more and more disclosures as it has come out known for revamping of offer document. The market regulator has released new norms on scheme of information document, which is also known as SIDs, and that has to be implementable by next financial year, meaning by 1st of April 2024, all these changes needs to be made. Among the major changes which has been suggested as per new norms are there needs to be a web link for investors where they can see that which are the companies where the top 10 investment has been made, which are the sectors where investment has been made. So all that information needs to be available via web link, and that has been mandated as per new norms. Apart from that, if there is any investment which is there from AMC board members, all that information needs to be disclosed by the mutual fund entity. There is also mandate that the mutual fund entity needs to have a riskometer on the front page of the offer document. The idea is simple, that risk needs to be disclosed upfront by the mutual fund companies. Hence, it has been asked that the customers should know on the front page itself what is the riskometer. So all these changes needs to be incorporated by next financial year. There is a sufficient time which has been given to mutual fund companies for adhering to these guidelines. Remember, last week also SEBI had sent a letter to industry body SEBI for getting an idea about risk-based mutual fund, a different category, and now SEBI has come out with new norms for offer document where disclosure is something which is made compulsory on certain parameters.
Well, thanks, Ankur. Hopefully, smarter investment decisions with simpler mutual fund documents. But with this, we're timed out on this segment. See you on the other side.
Welcome back to the show, and we are on that part of the show where we'll take you through all that's trending on the stock, with stocks that you have to keep an eye on. But first, let's go across to Ansh, who's in the studio right here with us. Ansh, the Nifty, it closed below that 19,000 level yesterday. So what is the F&O trends that you witnessed, and it's expected today as well? Give us a snapshot of that.
Right. So we'll start with like 2 sessions back. After Nifty retesting 19,200 level on 31st October from downside, the selling continued for the second session, establishing 19,200 as the strong resistance. This keeps the bias negative. Now let's see what happened in FNO segment. Short builder was seen in Nifty futures with open interest increasing by 4%, whereas on option front, we saw very active call writing at 19,100, indicating resistance around this level, and put buying happened at around 18,900, indicating traders expecting Nifty to fall below this level. Now let's shift our focus to what FIs did. We are seeing FI long percentage inching up for 5th consecutive session. Despite of this, short traders are way too ahead of long traders because total FI short contract stands at 1.9 lakh contract, whereas long contract are just 35,000 contract. So shorts are like 5 times stronger than longs at current price. On option index front, we are seeing call shorts getting added by 2.9 lakh contracts, while put shorts getting added by around 2.8 lakh contracts, indicating option traders expecting a tight range in the coming session. So in a nutshell, FNO data shows neutral to negative bias. Also on charts, it looks bearish till 19,200 level stays protected on upside decisively.
Well, that's about the futures and options roundup, Punch, but help us understand the stocks that are buzzing on account of news flow as well.
Sure. So let's go through the few stocks which came yesterday for the earning basis. So we'll start with JK Tyre. Company reported a 4% increase in revenue, reaching 3,897 crore. It also achieved a substantial growth in profit with 242 crore compared to 51 crore on year-on-year basis, indicating a significant improvement. GCPL records revenue of 3,602 crore, reflecting 6% increase as compared to the previous year, whereas its PAT also grows strongly, reaching 433 crore, representing a 21% jump here. Moreover, JCPL's EBITDA stands at 704 crore, which is up by 30%. Triveni Turbine demonstrate a robust performance with a 32% increase in revenue, and PAT also reflects strong growth with a 39% improvement. Further, company's EBITDA is also up by 34%. Fino reports PAT of 19.5 crore, showing 41% increase compared to its previous year's 13.8 crore. Birla Cable's revenue stands at 174.7 crore, which is down by 12%. Profit has also fallen by 45% to 5 crore. EBITDA also reported a down move of 42% to 9.7 crore. LIC Housing reports profit of 1,188 crore, marking a significant increase from previous year's 305 crore. Additionally, net interest income is 2,107 crore, reflecting a substantial 82% jump here. KC International registered a notable 11% increase in revenue. Company's PAT remained flat to 55.8 crore, whereas EBITDA jumped by 54%. So keep an eye on the stocks.
Yes, Ansh, we'll definitely keep an eye on all those stocks. Thank you for taking us through all of those. But now shifting focus, a bitter family feud has seemed to have come to an end, and the Murugappa family has announced that its members have undertaken the necessary actions to effect the family arrangement. And in the upcoming days, the parties will take steps to withdraw all the legal proceedings between the family groups and also complete some pending formalities. Well, in an exchange filing, the group further stated that no listed company of the Murugappa group is part of the arrangement. However, the notification that did not contain any details of the arrangement. So remember that Wali Arunachalam, who is a daughter of the late Murugappam, has been engaged in a legal battle with other members of the family, seeking an equal opportunity to run the affairs of the group's holding company.
Right. So, well, that is about the Murugappa family settlement. But switching focus back to earnings now, Tata Motors is also all set to report its Q2 results. Now, you look at when you look at the results that we're expecting, we do have Srishti who's waiting by with the details of what to expect. Srishti?
Yes, Tata Motors will also be in focus on the back of the earnings, because do remember the sales were actually 7.5% up on a sequential basis, and this time India business performance has seen a mixed bag because the commercial vehicle volumes were up 3.5% YOY, while the passenger vehicle volume fell 3%. And the JLR sales as well we have seen in the quarterly update, wherein because of the plant shutdown, the JLR volumes were impacted a bit as well. So all in all, we are expecting a decent set. Talking about the margins and the numbers that you need to be tracking, so JLR EBIT margin is expected at 7%, which is actually lower than what the company reported in Q1 FY24 at 8.6%. Though we can see an expansion in their India CV as well as passenger vehicle EBITDA margin. CV EBITDA margin expected at 10.8% and PVA EBITDA margin expected at 6.7%. Given the operating leverage, the cost efficiencies as well as the improvement in the segmental volume, we can see the margins getting a bump up, but definitely the JLR cash flow will also be a key to track, because the company has already said that they are presently expecting a positive free cash flow of around £300 million for Q2. So update on that will also be tracked upon. Talking about the numbers quickly, then onto the revenue figure, we are expecting 1,76,087 crores onto their top line. EBITDA expected at over 14,000 crores. Consolidated margin we are expecting at 13.2%, almost flattish on a sequential basis. And onto the profit figure, 4,315 crores is the expectation, and that will be a jump on a quarter-on-quarter basis of 40%. So that's the expectation of Tata Motors. All eyes on the numbers.
All eyes will definitely be on Tata Motors. Thank you, Srishri, for taking us through that. But now shifting focus on the macro news. Finance Ministry, they have released their GST revenue collection figures for October 2023, and this is the second highest ever, next only to April 2023 at rupees 1.72 lakh crore. ET Now, Sumit Chaturvedi, he's joining us with more details on this. Sumit.
Well, as reported by ET Now already, in the month of October, GST rates have risen significantly at 1.72 lakh crore rupees, registering a healthy growth of 13%. Well, overall, in the last few months, the average GST collection has been 1.66 lakh crore. That's also 11% growth. So it's clearly a remarkable number when it comes to collection of GST numbers. There are many factors responsible for this. First of all, increase in economic activity. This shows that the economy is resilient. There is more economic activity that is happening and taking place in the country, especially in the backdrop of COVID-19 pandemic. Second, increased compliance also. It shows how there is more compliance, and that is leading to more and more collection of taxes. The numbers, healthy numbers, we have been tracking month after month. Also, we can say that increase in imports, that's one factor because of which it is increasing. That's why the numbers in import numbers are also visible. And fourth, increase in trade activities. That is also one of the reasons why GST numbers are healthy now month after month. There were earlier concerns about rural economy, but that is also coming back to normalcy slowly, and that is one of the reasons why GST numbers are good. Going forward, there are more months, but in November, it's also likely there will be a record collection of GST numbers because of festival season demand.
Well, thanks, Sumit. Here's a little something for the cricket fans. Travel-linked tariffs for World Cup cricket semi-final dates spike as India's chances of advancing brighten. Now, airfares and hotel rates in Mumbai as well as Kolkata, which are the venues for the semi-finals, see a jump on the match dates. Bhavya Dua filed this report earlier.
Right, so the travel-linked tariffs for World Cup cricket semi-final dates are seeing a spike as India's chances of advancing are brightening up with each passing match. ICC World Cup semi-finals are set to take place on November 15th in Mumbai and on November 16th in Kolkata, and that has led to a surge in the travelling and lodging expenses at these locations. Airlines and hotels are benefiting from this World Cup frenzy. Airfares to Mumbai have surged about 50%, but they remain mostly flat for Kolkata for the same dates. Let's take a detailed look at these airfares to these destinations from some of the major locations. Now, if you look at travelling from Delhi, Kolkata, Srinagar or Dubai to Mumbai, then there has been a surge of around 30 to 60% in the airfare prices. But if you're travelling from Bangalore or Chennai, then there isn't a significant increase. Similarly, if you look at travelling to Kolkata from Delhi, Chennai, Srinagar and Dubai, then there isn't a significant increase. But if you're travelling from Mumbai and Bangalore, then the prices have surged a bit. There has also been a 40% rise in the pace of hotel booking for Kolkata and 16% for Mumbai on the semi-final dates. Now, this has led to an increase in the room tariffs for 5-star hotels in Mumbai to increase by 50 to 100% for November 15th, and at the same time Kolkata is seeing the tariffs for hotels across all categories climb by 20 to 40%. If we look at these 5-star hotel categories in Mumbai, then the rates have increased from 14,000 to 24,000 to 17,000, going up maximum to 45,000. Similarly, if we look at Kolkata, the rates for hotels across all categories, 3-star, 4-star and 5-star, have risen sharply. The Cricket World Cup craze and the onset of the festive and wedding season in India are contributing extensively to hospitality, aviation and retail industry in the country, and we are going to see this surge growing further as we move closer to the holiday season.
Well, thanks, Bhavya. India will face Sri Lanka at the Wankhede Stadium in Mumbai today. The last time these two teams played an ODI at this venue, the occasion was the 2011 World Cup final. Now, 12 years later, though, things are a little different. India looks to continue their 6-win streak today. And if they beat Sri Lanka, they will become the first team to qualify for the semi-finals. Now, on the other hand, the case is the opposite for Sri Lanka, who will need to defeat India today if they want to continue their World Cup dream.
Well, yes, and let's look at what's happening on the Asian market also. The GIFT Nifty, it's at 19,215, higher than what our level closed at yesterday, below 19,000. So it looks like a good gap up opening for our market, and even the other Asian markets are doing pretty well. Let's see how it pans out for our market. And
well, with this, we're timed out on this segment. Thank you so much for tuning in. From me, Shreyansi Singh, and Lisa Fernandez.